This video is a quick introduction to the DARMA app, and in it we will show you how to create a new DARMA account with your email and password, add a basic variable annuity, enter key information about the contract, use the app to produce reports and charts and review them to check the contract's estimated evaluation and in-the-moneyness, and best interest compliance. First, go to the Ingenuity website, ingenuity.com, and click on Want to Learn More. This will display the Welcome to DARMA panel. You will see 3 buttons, and you are strongly encouraged to check out the first video to get a better way of understanding and presenting deferred annuities. Then check out the second video to get a good sense of how the app works. After you have checked out the 2 videos, then click on Test Drive the app, and you will get the new Users panel. And this is where you will set up your account by simply entering your email address followed by your password, then re-enter it for validation. Then click on Start the app. This will then fire up the app. However, as a new user, you will not have any client contracts defined. So this new window will pop up and ask you which of the DARMA templates you wish to add. So we pick the variable one and click OK. This adds a copy of the template which you can then subsequently edit to describe your contract. If you need to add more contracts, simply use the Add a New Contract. Or if you're performing a comparison to other contracts, you can click on Compare it to and add them there. Clicking OK has added the template and also displays the main menu on the left with actions that can be performed on the selected contract to the right. Next, click on Open It to bring up the contract for your customized editing. This is the contract editor. Its menu on the left has 4 main sections. The first is the contract, the second is taxes, the third is strategies, and the fourth is report and charts. On the right panel is a set of preparation instructions that will help you locate the necessary contract data you will need later for such things as account balances, surrender charges, fees, and payout rates. Okay, so let's expand the contract section to view its component parts. And they are scope, the carrier, general info, accumulation fund, and paid benefits. So first, let's click on the scope. In order to minimize the amount of data you need to enter, the app asks for the widest range of target years, and in this case, it's ages 65 through 69. Next, let's look at the carrier. The app asks for the best FSR or financial strength rating, which can be obtained from AM Best website. Next, let's click on General Info. And its component parts are basics, type, features, balances and values, and owner info. So let's take a look at each of these topics. And on the right here, we have some general contract information. So let's take a look at basics. The first question is assign a unique name for this contract. We can rename it to anything we like. Next question deals with tax qualification status. And the options are tax qualified, not tax qualified, or zero tax. Then the issue date, followed by the date that the evaluation is based on, in this case, 03/20/2020. So any balances that you enter need to be as of 03/20/2020. And then at the bottom, you can put in your own notes. Let's take a look at type, contract type. What general type of contract is this? In this case, it's variable. The other choices are indexed or RILA, structured, or fixed funds only. And is the contract currently paying out via a guaranteed withdrawal benefit? That means that the rider has already been exercised, and this would have to be an existing contract. Features. Is this a single premium contract? Yes. If not, then we would need information on future premiums. Does the contract have a guaranteed income benefit? Yes. Contract ownership is single. The other option, of course, is joint. However, the joint income option is available for basic annuitization and the guaranteed income benefit. And the last question, does this contract have a distinct give fund? And the answer is yes. This means there's a separate shadow fund upon which the basis for the minimum guaranteed income benefit is used. Next, let's look at the balances and values. These are just the high-level totals for the account value, the cash surrender value, gross premiums, and gross withdrawals to date. And then last is the owner info. The first question is the spouse a sole beneficiary and at least 10 years younger than the primary insured? The app needs to ask this question because it does affect required minimum distributions. And then the next two questions are about the primary insured, in this case age 53 and male. And the second person is 51 and female. Okay, so now let's close this up and let's take a look at the accumulation fund. So let's take a look at the component parts of the accumulation fund. And as we can see on the right here, the main components are the sub-account balances, the premium deposits, at issue bonus, and account value deductions. Next, we'll take a look at the sub-account balances. And as you can see over here, there's documentation and how you should enter the variable sub-accounts and what the different asset classes are. Next, we'll take a look at variable sub-account balances. This is where you would enter them. And if we go to the next page, we can see in this particular example, it's the diversified balance income, which is a 60-40 split on stocks and bonds. And the current balance here is $100,000. Bonuses. If there was a bonus at issue, this is where you would enter it. Now let's look at the account value deductions and their component parts. The first is fixed dollar. Next is percent of sub-accounts. Next is percent of premium. And let's take a look at the rider charges. And there are 5. The first 3 are named: the guaranteed income benefit, minimum guaranteed death benefit, and mortality and expense, M&E, and 2 others. So let's close that and let's go open again. And let's take a look at the entries for the component parts. As we have covered the sub-account balances and bonuses, let's take a look at the account value deductions. And the first is fixed dollar. And in this case, the only charge that we have is $100, which is waived when all funds, the total of all funds exceed $50,000. Next, we go to the percent of sub-accounts. And of course, there has to be a balance before you can enter rates for any fees. So we need to go to the next page and click on enter rates. And as we can see here, the rate is 2% starting in the first year. You will notice these little dots over here, which means that it goes on forever unless you enter a second entry and the year in which it starts if there is a change. Next, we go to percent of premium, and we can see here it is 0. You will also notice that rates can vary by years and ages. So if they're the same, you click here. If they're not the same, you'll click here, and then you can enter the actual rates. Next, let's go to the rider charges. And the first is the guaranteed income benefit. And as we can see here, this is 1%. And it is applied to the total account value. Here are the other choices. And the charge is deducted from the total account value. Our other choice is from the variable only. And the guaranteed upper limit on future charge rates is 2%. And last, we have the question about the rider charge. Does it continue after the rider is elected? The next rider charge is the minimum guaranteed death benefit. And in this case, we have a 0.5% charged against the total account value. And the next one is the mortality and expense. And in this case, we have 0 charges for that. So let's close up the accumulation fund. And let's go to the next section, which is paid benefits. As you can see on the right, our main interests here are the surrender value, death benefits, and income. So let's take a look at surrenders. In this case, we have a straightforward decreasing percentage for the surrender charges, and here's where we would enter the rates. And as you can see here on the left is where you enter them, and the results are displayed on the right. And in this case, it's going from 10% to 1% to 0% in the 11th year. For the death benefits, we can set up a current minimum guaranteed death benefit. In this current balance is $100,000. And we can have a lock-in schedule, and we can tag the years. So for example, if it's locked in the 5th, the 10th, and the 15th, then we can designate that here. So let's save that. Okay, let's take a look at the income. And the first thing we look at is the charge-free withdrawals. And again, here it's fairly straightforward. It's 10% in each year. And it's applied at the time of withdrawal. The other choice would be at the end of the prior year. And there's no limit to the free withdrawals. So for example, if it was limited to a 50% of the premium, then you would enter 50% here, and your total free withdrawals would be limited to that amount. Next, we look at annuitization. And all deferred annuities have an annuitization option, basic annuitization. And this is where you would enter the single rates and the joint rates. Even though it may be a single ownership, you should still enter the joint payouts if they are available for the annuitization, and this is where you would enter them. Okay, so let's take a look at the guaranteed income benefit. And the first thing we're going to look at is locked-in minimums. If the contract allowed locked-in minimums, this is you would change this to a yes, and then you can tag the years where it is locked in, and for the account value being greater than the shadow fund, and this is where you would enter that. But let's go back to what it was for this example. Next, we look at the basis. In other words, what is the basis for the guaranteed income renter benefit? And the first question is, what kind? And the answer here is that it's withdrawals and not an annuity. When can the benefit be elected? Well, years 1 through 72. The income base can be the maximum of several values, and this is where you would enter it here. So, for example, if it was the maximum of the account value and net premiums in the GIB fund, and there's a locked-in minimum, this is where you would enter that information. And are there any further modifications to the payout rate? And of course, here we have where we address the frequency of the payments. Not modified, but our other choices are cost of living adjustment and a fixed percentage increase per year. The payout. Just like the annuitization, it has rates for both single and joint, and this is where you would enter those. And here's the joint. And we also address what the payout percentages would be for the primary survivor and the secondary survivor. In this case, it's 100%. Next, we'll take a look at the GIB fund, the shadow fund. And the first part is the fund crediting, which in this case is 5%. And of course, we have to enter in what the current GIB fund balance is. And next, we look at the fund resets. And some years you may have an option to reset the GIB fund balance, making it equal to the end of year account value. This fund balance would then go on the usual way. So if you have any future options to do that, you would click here, and this is where you could tag the years. So if you have a lock-in in any of these, a reset in any of these, this is where you would tag the year in which it's allowed. Okay, so that's the paid benefits. Now let's take a look at taxes. So let's take a look at penalties. And the penalties apply to early withdrawals. And the penalty rate here is 10%. And the penalty applies to withdrawals before age 60. In the United States, it's 59.5, and 60 is the appropriate entry here because everything is done annually. Let's take a look at tax rates. This is the simple model. We're not using marginal tax rates. And so the rates for free withdrawals is 22%. For a surrender is 22%, and during retirement is 12%. If you want to use marginal tax rates, then this is where you would enter the rates. And because there are 7 tiers here, all the way up to $600,000. And you can adjust the income levels for inflation. So if you click here, income levels will be adjusted for inflation. Once we save this, you will notice on the left that other income comes into play. So let's take a look at that. And here we're saying that it's level for all ages, and the annual income is $75,000. And it's adjusted, the basic taxable income is adjusted for inflation. And what is the effect on a first to die on the taxable income? It reduces by 50%. Let's go back here and just put it back to the simple stuff. And you'll notice when you save here, other income disappears because that would not affect the scalar amounts that we're using here for the tax rates. Okay, so let's go next to strategies. On the right is some documentation, and the first paragraph is very important because it says clients have a big advantage over insurance companies because they have first-hand knowledge of their current health status, longevity estimate, financial status, risk appetite, tax bracket targets and goals, all of which are used by the app to predict optimal strategies and evaluations for the contract. So let's take a look. We have age-related questions, discounting, benefit preferences, and tactics to use and rebalancing ratios. First, let's take a look at age-related questions. And the first two questions relate to longevity for the primary insured and the second insured. If you notice to the right here, if you click on it, brings up the Northwestern Mutual app, which asks a series of questions to determine the longevity of your client. And so once you have run that and comes back with an answer, in this case 83, similarly for the second insured, in this case 85. And then for retirement ages to include in calculations from 65 through 69. And the preferred retirement age is 67. Next, let's take a look at discounting. This is probably the most important part of the strategy because it deals with how the client would invest their monies if they weren't investing in the variable contract. In this case, we've chosen conservative, but we have other choices: moderate, aggressive, treasury inflation protected securities, your client's contract portfolio, a customized portfolio, or a questionnaire based. Next question is on capital gains tax rates, which in this case is 15%. And a couple of questions related to how the discounting would be adjusted for fees. In this case, we're going with a no-load mutual fund as for the discounting. Next, let's take a look at benefit preferences. I have a preference, cash versus income. This allows you to give a bias towards cash, which is at the 0 end, or 100, which is at the income end. We'll just turn that off. Benefits to ignore. For example, if the client is not interested in leaving money to heirs, then you could exclude the death benefit. Not interested in annuitization, but certainly interested in guaranteed income, then you would turn off the annuitization. We'll just leave those in for the moment. Next is tactics to use. Do you want to take charge-free withdrawals starting at age? You enter the age here. Include future premiums. If you've planned to future deposits, you can turn this on or off to see if that has an effect on the evaluations. And then rebalance sub-accounts because this is variable. You'll notice that once you click on this, you will see rebalancing funds. So we go there. This allows you to go in and rebalance your investments in the variable account based on future ages. For example, you may want to go from an aggressive investing strategy to a more conservative one as you get close to retirement. But let's go back to tactics and we'll turn that off. And so that's strategies. Let's next go to reports and charts. First, let's just minimize taxes and strategies. And we'll click on Reports and Charts. The first section is Overrides. And all this does, it allows you to override the crediting rates calculated by the app and the discount rates calculated by the app. And you would do this by clicking. And so, for example, if you just wanted to test a constant credit rate of 5%, you would type a 5 in here. And a custom discount rate of 4%, you would type it in here. And if you click here, you can enter rates, different rates for each of the projected years. Okay, so let's just turn these off and go to the next section, which is net versus gross. And you always want to do net because that's the real world, and that's the real evaluation of in-the-moneyness and the value of the contract. However, you may be comparing results to some third-party software that only does stuff on a gross basis, so you may want to elect gross just to do a apples and apples comparison. Anyway, in this case, we're going to do net. The next section is Quick Check, and basically this is a sanity check that produces various reports. So let's just click on View Report, and this will give you a running commentary on what's going on. You can just click Continue at any time, and we go to Completed Reports. And here is the result of running the Quick Check. So let's click on that. And if we have several reports, but if we go to the end, it lists out all the various reports that it has produced, including accumulation fund projections, surrender values, guaranteed income fund, cash surrender values. So this gives you the opportunity to go through and look at each report to make sure that the results are congruent with what you believe the policy should be doing. So this is a great sanity check. Let's close this, and we want to go back from the list of reports. In this case, we only have the Quick Check, and go to last edited contract, and that will bring us back to where we were, so that we can continue on from where we left off. And so the next thing that we want to look at is the multi-scenario. Multi-scenario. So let's expand the menu here, and we can see the main sections are summaries, select the reports and audits, and cash flows. So why multi-scenario? How likely is it that you could project what the markets will do for, say, the next 20 years? The answer is it's highly unlikely you would get it right. Even though one set of assumptions, a single scenario, is useful for checking for your calculations, it vastly understates the range of possible futures. Obviously, the more stabs you take at it, the more likely you will get something that resembles the real-world projections that will actually happen. To avoid the short-sightedness of just one or small number of scenarios, DARMA uses BISAM best interest simulation evaluation method to generate and calculate hundreds or thousands of scenarios, estimating the performance of the contract over a wide range of possible futures. In fact, this is not a method that must be used by insurance companies to evaluate their in-force contracts for statutory purposes. In a similar vein, DARMA projects multiple scenarios and produces distributions of those results using the BISAM in-the-moneyness metric to provide you with an average rating for the contract, not only to determine if the contract is in the money, but also to what degree. This ranking can then be used to compare a contract to other competing ones. Next, let's take a look at summaries. This is simply a prepackaged subset of some very useful reports that provide an excellent high-level view of the evaluation and rating of the contract. Next is selected reports and audits. In a nutshell, selected reports and audits will allow you to produce detailed first principle analysis of all the important calculations that went into the evaluation of the contract for any selected individual scenario. This is invaluable for proving your numbers and also checking that your entries are reasonable and accurate. And, as a bonus, it's also a great teaching tool for understanding the mechanics of a deferred annuity's working parts. The reports cover every single path, both in the deferred period and any income period for every future year. So, in summary, this is the opposite of a black box and will prove invaluable for validating that your recommendations were in the best interest of your client. So, let's click on the 1001 Scenarios button and take a look at some of the results. Simply click on Continue, then click on Completed Reports. Please note here that the last report produced will be on top, in this case the 1001 Scenario Report. Also note that any unread report is displayed in bold. So let's click on it to get the report. Before inspecting it, let's quickly jump to the end to get a list of all the reports produced. The first 6 reports cover all 1001 scenarios and contain the important high-level results. The remainder are for the selected individual scenario, which in this case is number 978, which is also the 50th percentile and the median value for the projected OPB in the moneyness, where OPB stands for Optimum Policyholder Behavior. In other words, the future decisions by the policyholder are such that they would always maximize in the moneyness in each scenario. This is a great unbiased metric for comparing the strength of different competing contracts. Contrast this to the IPB in the moneyness, which stands for Informed Policyholder Behavior in the moneyness. And this is where the policyholder in each year is assumed to be using the DARMA app's future projections to make informed decisions about their behavior. OPB in the moneyness will always be greater than IPB in the moneyness. However, they both contribute to the overall rating stars awarded to the contract by the app. Now, let's go back up to the top and take a look at the important high-level results. At the top of the report, we have some important high-level results, the most important of which are in numbers 7 and 8. Number 7 reports the number of stars out of 5 that the app has awarded, which in this case is 3.39 stars. Number 8 reports the best interest status, which is positive. So chances are good for a green light for this contract's potential purchase. To highlight the first principles audit nature of these reports, let's take a look at one of the results, the OPB median value of $121,021. And let's see where it pops up in the reports. The first time we see it is in its 50th percentile position in the calculation of the OPB in the moneyness, exactly where we would expect to find it. And here's the value. Next, we get it in the actual distribution list, again in the 50th position, 50th percentile. And next we see it in an audit off the 50th percentile for the OPB. And these are the other values that are in the percentile. There are 10 of them. And the next time we see it is in the IPB distribution list audit. And as you can see here, it's in the 57th percentile. And you would expect this because the IPB is lower than the OPB, and therefore the percentile for 121,000 would be higher. Next, we see it in the actual audit of first principle audit of how the number was arrived at. It's 16 annual payments of $12,593.75. They are discounted to the start of year 16 at age 68, and then further discounted here to bring it to today's date, and giving us a total of $121,021.20. Next time we see it is in the moneyness audit for this scenario number 798, and it's contained in the present value of income audit, and as we can see, it has a 21% in the moneyness. Next time we see it is in the summary, and of course the years that we're interested in are ages 65 through 69. These numbers are ranked, and of course the highest one is the in the moneyness for the $121,021. And then we're back up to the top. This is just one of the component numbers used by the software to evaluate a contract. The user can produce audits for all the important results in any and every scenario to demonstrate how they were calculated from first principles. DARMA is the opposite of a black box and will prove invaluable for any future exam by any of the regulators who may come knocking on your door to audit your past transactions for best interest compliance. To summarize, that was a quick introduction to DARMA, and as you can see, it's a nicely designed app that's powerful and simple to use. And all the heavy lifting and difficult stuff, such as billions of calculations that make up the results, are done for you by the software. We looked at a simple variable annuity contract, but the app can handle many complications, and those are covered in the main tutorial that you can access from the Ingenuity website. The next important thing that you'll want to look at is preparing a presentation using DARMA. Our recommended presentation will include important numeric reports. It will also include high-level charts that are specifically designed to provide an immediate big picture of the complicated numeric results. It does this with a unique and clever combination of charts, colors, and shades of colors, and a very clever usage of in the red and in the black memes portrayed in a simple pie chart. The best contracts will have large in the very black slices and smaller in the pink ones. An instantaneous picture of both the in the moneyness of a contract, size of the in the moneyness slice, and the magnitude of the in the moneyness, represented by shades of black. Gray would be on the low side with black on the high side, that your client will immediately get. This will provide a good feeling comfort zone for any recommended purchase. In addition, the app provides a powerful facility to produce an integrated report that compares and ranks multiple contracts and demonstrates which one is the best fit. All these are covered in the video presenting to your client, which is accessible on the Ingenuity website, and I strongly encourage you to take a look at the wonderful way the DARMA app will help you more easily explain and demonstrate the strength and validity of your recommendations in a fashion that is truly unique and by far the easiest to understand.